Let's go to business now with Madison Reedy. Hi, Maddie.
Hi.
Retirement village operator Ryman Healthcare. Now, their results today. I'm picking with an ageing population, they do all right.
They definitely do all right. Although this financial year they haven't done as well as previous years. So their net profit after tax was $326 million. That was down 16%. But obviously that's still a lot of money. It is a pretty lucrative business of old age. Obviously with our ageing population, it's ever growing too. They did mention that the Auckland market, the property market has started to sour a bit. Obviously the figures there speak to that too. So they made a valuation gain on their portfolio of $102.4 million. That's a lot of money, but it is substantially less than the valuation gain they had on their portfolio in the previous financial year, where it was $185.3 million. The revenue was up 12%. The financial year just ended, so they say that strong demand in this type of business continues. People are still buying into and moving into retirement villages around the country and in Australia. Actually, at the end of their financial year, they had just 1% of their stock was unsold. So a lot of people are obviously moving into these. And they do plan to build more villages both here and in Australia. They actually have 20 in their pipeline at the moment. Now, that's 7,000 beds that they plan to build. That's usually how they equate things. That's how many people they could fit into these.
7,000 across New Zealand and Australia.
Yes,
with the new
in the
ones.
pipeline.
Yeah.
So certainly they're going to keep the construction sector ticking. And the Chief Executive, Gordon McLeod, actually cracked a bit of a cheeky joke with this one. He said that's more than Kiwi build.
That is a bit of a cheeky,
laugh at that one.
Is a bit of a cheeky joke, isn't it? Okay, on to the banks now. Now, small banks have had an opportunity to have their say on the Reserve Bank's capital plan, which you've mentioned in various business slots. This is the suggestion that they should be holding more money in their coffers. Yeah?
Absolutely. So we certainly have mentioned this one a lot. We've heard a lot about what the big banks have to say about this. They have an association called New Zealand Bankers Association, which speaks on their behalf and has obviously been pretty loud about this issue because it's a big one for them. So most of the big banks, what they have to say about the Reserve Bank's plan to make all of them hold, and especially them significantly more capital, they are obviously notoriously against this one. They say that it'll cause them to restrict lending and make borrowing more expensive. We heard from Westpac specifically today, one of the big four Australian-owned banks in this country. They said that this plan would drag down the economy, and they also mentioned hiking mortgage rates. They gave a pretty scary figure of adding $6,000 to an annual mortgage in Auckland. And they also questioned why the Reserve Bank is doing this at all. They said that other bigger jurisdictions around the world haven't moved on this yet, and that New Zealand should actually just, in Adrian Orr's words, watch, worry and wait rather than be the first mover on this. But up until now, we hadn't really had much noise from the smaller banks. These are the local New Zealand-owned banks. But they have made a squeak now. So this was a joint submission by TSB, SBS, Cooperative Bank and Kiwibank. So they are put their heads together and put through a joint submission, power and numbers there. They say that they are for a safer banking system. So in that regard, they like what the Reserve Bank plans to do here. But all of the banks have said that. They've all said, yes, a safer banking system is a good one. Although most of them are against the way that the Reserve Bank is going about it. So these smaller banks, they say that while this will achieve a safer banking system, they say that it won't actually make the banking sector fairer, which is another reason why the Reserve Bank is doing this. They want to, or planning to do this, they want to level the playing field between the larger foreign-owned, mostly Australian banks in New Zealand and the local New Zealand-owned banks. So the smaller banks say that actually won't do this. So they reckon it'll actually widen the gap, surprisingly, that exists between the local banks and the foreign-owned banks. Now, the reason they say that is because they say that they have less options to raise more capital to put into their reserves. They specifically said that they can't just, wave over across the Tasman and say, hey, Australian parent, do you mind chucking some more money over the ditch? They obviously don't have that financing backstop. So what they specifically want is an exemption from the Reserve Bank that would allow them to have less restrictions on the type of capital they can hold in their reserves. So that would be a mix of cash and assets, not just money there.
So just for them, just for the smaller banks?
Because they are less advantaged and if the plan is to level the playing field, they're saying that that's what would achieve that. And interestingly, to segue this into politics, the Finance Minister, Grant Robertson, he was with the Prime Minister this afternoon when she made a pre-budget speech in Auckland. Now, mentioning this is obviously topical for him too. He says now that the banks have all had their say, we should just let the Reserve Bank sit back and do its job.
What I look to as the Minister of Finance is to say, is our banking system safe and sound? Is it effective? And does it operate in a way that, upholds the values that New Zealanders would see? That's the balance I'm looking to see struck. I welcome the fact that the Reserve Bank has said they're going to bring some independent experts in to take a look at their proposals, along with looking at the submissions that have been made. We are still in a consultation process, and I just urge all sides of this to make sure that we go through that in good faith and keep in mind the desire we all have for a safe and stable banking system. I think banks, by and large, have accepted that there will need to be some increase in capital holdings. The debate then is about how much, over what time. That's what we now see the bank work through, the Reserve Bank work through.
And that was Grant Robertson, the Finance Minister, who's doing the rounds ahead of the budget, obviously. Madison, what's been going on the markets today?
The NZX Top 50 index closed down 0.4%. That's a drop of 41 points to close at 10,222. We followed all of the international markets down today, and that's due to the ongoing United States-China trade war dispute. The New Zealand dollar is buying at 65.2 US cents. We've bumped up a little bit there. 94.6 to the Australian and 51.5 British pence.
Thanks, Madison. Have a wonderful weekend. That's Madison Reedy with our business news.